picked this using a bit of a different criteria. It's Macquarie Telecom. Now, there was an investor update yesterday. The data center provider in a pretty sweet spot, so it's taking advantage of the long-term structural trends of cloud computing. Investors really lapping up the company. Shares are up around 50% over the past 12 months. Listen, I picked it today because I was fortunate enough to have a chat with the CEO, David Tudhope, earlier this morning to hear his take on the company's FY22 outlook. Listen in.
The whole world has accelerated its shift towards cloud. Cloud lives in data centres, and we build and operate large data centres in Australia. We've brought forward the planning of our new data centre, IC3 Super West, which will be a world-scale data centre. There's a lot of real challenges with data centres. Power is one of those. Data centres consume large amounts of power. They're so much more efficient than the predecessors of in-house computer rooms. But nevertheless, that level of power and that efficiency takes a lot of planning, a lot of effort. Our model for the last 20 years has been about buying large sites, large campuses, so more the US model, and then filling it up with data centres. And that's really what's enabled us to bring forward this extra capacity to meet this COVID-stimulated shift to the cloud.
All right, so a COVID-stimulated shift to the cloud. Macquarie Telecom is furiously building those data centers and doing so using that campus model that it has taken from the United States. So now let's get a view on Macquarie Telecom from my guests here in studio. I was just reading a broker note from RBC Capital Markets. It's got an outperform on the company with a price target of $80, Gaurav. What do you think?
My target's higher.
Is it?
Yes.
What is it?
I reckon it could be worth $100. And the way these guys allocate capital, I wouldn't be surprised. I wouldn't sell it at $100 either. So I'm going to, fair warning, both of you, I'm going to engage in a bit of boasting here. We upgraded this below $20. I've been following this stock for a long time and just waiting for a chance to buy it. It was the first thing I upgraded when the market fell to madness in March last year. Yep, the first stock I went to. And it's one I've been waiting for a while. It is a intriguing business because the business started out as a traditional telco business, which is not a great industry to be in. The numbers are just okay rather than compelling, but then it's used its relationships and capital from that business to parlay into cloud, government, and data centers. And that is a splendid business. And these guys have done a wonderful job of allocating capital, of leveraging the balance sheet, and of growing that business to the extent that it is now the overwhelming majority of Macquarie Telecom. And I still don't think that the market as a whole fully appreciates the strength of data centers as a business. I think most people view them as property businesses or infrastructure assets, which they are, it's true, but they're also network businesses. We've owned NextDC and Infratel, which owns CDC, the largest government DC in the land. And all of those companies benefit from these networks that are built inside the data centers. So NextDC, for example, is a key competitor to Megaport. Megaport's trades on these enormous multiples. They talk about these great connections. NextDC does the same connections inside its network. Equinix, the world's biggest data center operator, does the same thing. Macquarie is building something similar at a much smaller scale, but with all those benefits tangled up as well. They actually generate leasing revenue from having customers inside their DCs, and then they generate very high margin services revenue, which keeps those customers intact. We're only really at the beginning. At the moment, we're starting to see the rental revenue start to roll onto the numbers. Over the next few years, we're about to see the services revenue swamp margins, and I think they're going to increase tremendously. As I said, I think this is potentially worth over $100 a share. I own it personally, and I wouldn't sell it for years. It's a long-term holding for me. Look, if you're a long-term investor, you can buy it now. They are going through a capex-heavy portion of their cycle at the moment, so there's a chance it could fall further, but I shouldn't worry a long-term investor. Buy.
$66 you'd be buying today. Luke, $100 price target from Gaurav, that's pretty punchy.
Yeah, I hadn't considered a price target, but I think it's a buy too. And I agree with Gaurav, it's a long-term investment. You see from the share price, it can be lumpy. It's a very liquid stock, which is what drives that a little bit.
Yeah, true.
To drill into Gaurav's point, they had their investor presentation yesterday, Nadine, And this business did an interesting thing a few months ago, Gaurav, where they restructured their reporting lines of the
Yes,
business and broke
yes.
out data centers for the first time.
Yeah.
And when you look at those numbers, the core telco business, as Gaurav pointed out, it's a stable business but low growth. But that's providing a lot of cash flow that they're investing back into the data center business. That business does about half of the revenue of the group and only contributes about a quarter of the profits, whereas data centers generated 7% of the revenue and contributed nearly a quarter of EBITDA. So the economics of the data center business, as Gaurav pointed out, is tremendous. I've been familiar with Macquarie Telecom for a while and used to own it at the shop I was at. It's one where it's the thing I like about the business could also be its greatest weakness, which is it's been content to grow slowly over time, whereas some other competitors, NextDC, most among them, realise that the industry could be in a land grab right now. So NextDC is raising capital, investing heavily, whereas Macquarie Telecom has been more content to slowly take that capital as they get it in and move slowly. So it's a risk that they are small and could be left behind by those competitors, but the type of investor I am, I love that prudence from management. And you had David there before. He's a fantastic manager. They have unbelievable NPS scores across their telco business. I'm sure data centers would be the same.
That's so true. When you compare what NextDC does to its balance sheet, it gears up, takes on a lot of debt, invests very quickly. Only the managers would show the conservatism and care with the balance sheet that Macquarie has shown. I think that's the big difference between the two.
100%. And so I think it's a buy as well. I don't have a specific price target, but for me, definitely long-term investors, because yes, it will be volatile. And you saw before it's pulled back from $80 odd to 66. You'll see that around the liquidity of the stock.
Yeah, the illiquidity is a big issue. We had a lot of trouble getting in.
But for retail shareholders, that's your opportunity too. I mean, you can take advantage of that illiquidity. Average up into a position like this, or average down if that price is coming down. You don't have to pick it all up straight away, but long term, love the industry they're in. I love their prudence of the way they've allocated capital, and I think it's such a well-run business. I really like it.
Well, I'm glad we started the show in this way. It is a buy from both of my guests. It's already in the AusBiz portfolio, so it will remain there.